Last year, I think it was about a $2.8 trillion budget deficit, if I remember correctly. Don't quote me on that, but I'm pretty sure that's right. But regardless, we're on track for another close to $2 trillion deficit this year. So that means someone has to lend us that $2 trillion gap. And who's going to do that? If China's backing away, Saudi Arabia is backing away, and then the Fed is backing away, who's going to step in and lend us money to finance those deficits? It certainly isn't going to be, average retail investors at these artificially low interest rates. And to incentivize, new demand for treasuries, interest rates would have to rise. Well, if interest rates rise, that collapses everything. So you can kind of see the dilemma we're in. Just knowing this big picture dynamic, there's no answer to this. You could sit across from, a Harvard PhD economist and present these to them, and they're not going to have an answer because there is no solution. So it's incumbent upon us to have a plan and a strategy to weather what's coming down the pike or in the years ahead. This goes back to 2011, and this is that big cup and handle pattern that everyone's been talking about. And the kind of the resistance levels to watch are $2,000 and then $2,089. And although this feels like it's been a brutal sell-off, and it has, we're more than $100 off of the recent high, we're still above the key breakout levels. And when you go to a weekly chart, a little bit more of a zoomed in view, you can kind of see some of those big levels. So we broke out above this triangle pattern. I've heard people call it the Captain Obvious triangle pattern. And I think that's a good name for it because anyone who looks at technicals was watching that triangle. And once we broke out above it, the next objective was to make a higher high above 1880. Well, of course, we not only went above 1880, but above 1920 and 1960. So we were due for some backing and filling here. When you see these kind of nice rallies, we all want the price to just keep going up and up and up. That's what we want. And because we want to break free financially quicker. But that's actually, parabolic moves benefit the fewest number of retail participants. So to me, this pullback is welcome. And to be honest with you, I kind of hope it pulls back a little bit more. We've got the 200-day moving average down at about 1816. I would love to see it pull back that far. I'm not saying that's what I think is going to happen, but that would be very healthy. It would shake loose the momentum chasers. Any kind of war premium that was built in might be taken out, and we'd be back into more of a sustainable uptrend. And it would give us some nice trading opportunities and entry points if we pulled back just a little bit further. It's also important to note the bankers are they're shorting this rally. And the gold COT, it's not pretty. That doesn't mean we can't keep moving higher, but the commitment to treasury support is kind of a fly in the ointment and suggests we might see just a little bit more pullback before the uptrend resumes. The definition of an uptrend is higher highs and higher lows, right? So the previous low was 1780. So as long as we carve out a higher low above 1780, that's an uptrend and that's healthy. What we don't want to see is a lower low below 1780 because that could suggest, some more weakness, and this year and a half consolidation that we've been seeing could continue. But I think that's very unlikely at this point. I think we're going to make a higher low above 1780. And as long as that happens, I'm happy. Yeah, there's a couple ways you can measure it. If you do a measured move from the handle, which would be at 2089 here down to 1675, what's that? Just over $400. So you can add $400 to 2089, and that gives you, let's call it 2,500 for easy math. So that's one measured move target. Another way to do it is to kind of take the big cup part, and if you call it roughly 2,000 at the top and 1,000 at the bottom, you can add 1,000 to that 2089 and call it just over 3,000. I think both of those targets are going to get taken out in the fullness of time in the coming years, and I think we're going to go actually much higher than that. But those are two measured move targets. We had the silver squeeze downtrend channel that was in force for over a year, February 1st, 2021, and we finally broke above that. And now we're just simply pulling back to retest what was resistance is now support. Now, could we go a little bit lower? Sure, we could. The 200-day moving average is down, I think, around $24.20. So it wouldn't bother me at all to see it pull back towards the low 24s. But right now, so far, we're just pulling back to the initial support level. So nothing concerning here about silver yet, even though there is a little bit more downside risk. I am convinced the trend has changed in both silver and gold. And I'm looking for higher highs and higher lows going forward. And by the way, you mentioned silver hasn't made a new all-time high yet. If you go back throughout history, it's almost inevitably, usually, silver makes a new all-time high sometime within a year or two after gold does. And, silver obviously hasn't done that. It's still about half of where it was in 1980. So silver's due for a big catch-up move. And, I remain 100% convinced that's going to happen at some point. When emotions are running high in these times of heightened volatility, it's important to zoom out and take a look at the big picture, I think, number one. And number two, to remind yourself of your personal strategy if you have one. And if you don't have one, it's time to craft one, a personalized strategy. So zooming out to the big picture, I think it's important to think, where is all of this headed over the next couple of few years? What's the end game here for the US dollar and other currencies? And it's important to remember we're headed to a point where there's really no solution to these problems we're seeing. There's just managed outcomes. And we see, national debt is north of $30 trillion now, and we're rapidly approaching a point in the coming years where 100% of federal tax receipts will go towards servicing just the interest on the debt. Now, of course, the system cannot go on that long, and of course, something will break beforehand, but we're converging on that point, and there's no solution to that problem. And then second, we're in the news, we've been hearing more about the petrodollar system, and just today we're seeing Saudi Arabia is trying to broker a meeting with China. And I guess Saudi Arabia and some other OPEC countries wouldn't take President Biden's phone call over the weekend. Now to the casual observer, that may come off as just a side story. Oh, that's interesting, and move on to the next news piece. I view that as very significant, because the petrodollar system dates back to the 70s, is what's created so much demand globally for the US dollar. And the way it works is oil is sold in dollars, and then those dollars are recycled back in to buy US treasuries, which suppress interest rates. And that gives us an exorbitant privilege as the global reserve currency holder. Well, I mean, if that system begins to even just slowly break down, it's going to accelerate the demise of the US dollar. I mean, that's not a political statement, but it's math. It's just where we are, and that's very likely to happen. And I think rather than pontificate about it, it's important to have a strategy and a plan for where this is all headed, and that helps you stay grounded in the volatility that we're inevitably going to see along the way.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar, and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.